Hello, everyone, and welcome to our webinar. Today, we are going over 5 best markup strategies for electrical estimators. Not all jobs are created equal. Big, small, difficult, high competition, and owner-furnished materials can all add variables to your markup consideration. My name is Derek De La Quadri, and I am the president of Vision Infosoft, and Brian Hoffelder joins me today. Brian is Vision's training and software development expert and is leading today's webinar.
Good morning, everybody, or good afternoon. So one of the reasons for this webinar, the motivation to do it is I've always gotten the feedback or the impression over the years that people just have a overhead and profit markup that they put on jobs and don't give it a lot of thought. Sometimes they even ask for advice on it, and they just use the same number job after job and not take into account some of the different situations which Derek mentioned, which may affect your strategy. There's two really important things I want you to come away from this webinar with. The first is that if your overhead is, let's say, 20%, and you want to mark up your job enough to cover your overhead at a minimum, then you need to mark up 25% to do that. And I'll show you the math behind that a little bit later. But if your accounting or your CPA tells you your overhead is 20%, you've got to mark up at least 25% to recover your overhead. The other thing I want to do is to discuss where you can apply those strategies. I'll show you some formulas for figuring out what that markup is, but we're going to go over some situations like Derek mentioned when you've got more competition, less competition. And the big one is when you've got a job where the owner is furnishing a large portion of the material like the lighting or the gear. Those are pretty common scenarios where the owner is furnishing the lighting, and that really should affect your markup strategy. So those are the two big things, is realizing you got to mark up more than your overhead to recover your overhead. And I'll give you some examples of that, and then how to account for those situations where the mix of material and labor is not what you might normally see. Okay, so we're going to start with terminology, just to define some of the terminology we're going to talk about, because we're talking about some kind of business accounting terminology that may not be real familiar to you. And I know that I train estimators in all different levels of responsibility. Sometimes the owner just says mark it up X% for overhead and profit. Sometimes they get involved in the strategy. And I think even if you're not making that decision, I think you have an obligation to discuss this with the owners so that they realize when there's a situation that might warrant adjusting your strategy on this. Okay, so that's really what the goal is here, is if we can maximize the profit. That's always the American goal, is to maximize our profits. So these will all tie into that strategy. Say, what is markup? Markup is the combination of your profit and your overhead. So that's why we asked you those two questions. If you add 15% for overhead and 10% for profit, that's all part of your markup. Okay, so you just add overhead and profit, that's your total markup. Simple, but that's just for terminology. Again, we need to be clear. So what is overhead? Now, overhead is a pretty straightforward concept. It's all of your recurring costs to run your business. So it would include rent or lease on your building. It would include your vehicle payments, leases or purchasing payments. Utilities is a very good example of overhead. It's pretty much consistent. Your recurring costs are typically very consistent month after month. That's part of the idea here, is that you're going to incur these costs whether you're busy or whether you're slow. Any office expense, the big one here would probably be if you have salaried employees who are going to get a paycheck regardless, again, of what their job responsibilities are. If they're on a salary, they're part of your overhead. Any equipment expenses, if you're making payments on equipment, that kind of thing, that's part of your overhead. And then insurance, whether it's unemployment insurance, whether it's workers' compensation insurance, whether it's just regular business insurance, that's all, again, part of your overhead. The one area that might be a little bit harder to define as far as your salaried employees is some companies look at their project managers as part of their overhead. Some of them look at it as part of your costs. So typically your materials are not part of your overhead. You purchase them for specific jobs or even for your, for your inventory. Your job expenses, if you have to purchase permits, if you have to rent equipment, if you have to provide temporary lighting or temporary power, those are all direct job expenses. They're not part of your overhead. And like I said, the one kind of gray area in the labor issue is the project manager, because sometimes some companies look at the project manager as a cost of the job. Some of them look at it as an overhead item that's going to be there regardless. And in reality, it's probably a little bit of both. So the important thing here is that you're consistent with what you look at on a month-to-month basis as far as what your overhead is versus the rest of your operating costs. Okay, so overhead is your recurring costs. Now, and the idea here is that we want to make enough, put enough markup in to at least recover overhead. Profit is kind of a bonus, but at a bare minimum, we need to put in enough just to cover overhead, and anything else we can get is obviously is a benefit because it's profit. Now, this number I just popped up on the screen here, the average overhead for electrical contractors is in the 13 to 20% range. That's we got that from a recent study, and that's kind of a number I've heard over the years. It's pretty typical, and I think your results on the poll would verify that. So again, you keep that number in mind, because as you're looking at your overhead, it's not only important what your company overhead is, but keep in perspective if it's somewhere in that range, and if it's not, then you may need to take that into account when you're putting your markup in. Okay, so that's the average, and that's a definition of overhead. Profit. Profit's what's left after you pay the overhead and all of your costs of running the business. So it's the total revenue minus all your expenses, fixed expenses, job expenses, everything including the overhead. If there's anything left, that's profit. Okay. Okay, so here's the 5 scenarios we want to talk about as far as where you might want to consider making an adjustment, not just going with what your normal overhead and profit is. Small jobs should have a higher markup because they take more resources. If you've got $10,000 jobs versus $100,000 jobs, it's going to take a lot more of the resources of the company to manage those things, because a lot of those tasks are, going to take as much time for a $10,000 job as a $100,000 job, or they're not going to be they're not going to be 10 times as high for a $100,000 job for the time it takes to order material, record your payroll. All of the things you do normally are going to be proportionately higher for smaller jobs. So you need to consider a higher markup on small jobs because they will take more of your resources up. So again, in comparison to that 13 to 20% number, if you're on the high end, it might be because you're doing a lot of little jobs. And again, if you're on the low end, it may be because you're doing most of your jobs are larger. And again, this is a thing for strategy. If you see yourself bidding more small jobs, then you need to look at raising the markup, and vice versa on the other end. So it's the opposite with big jobs. Obviously, we just talked about that, but a larger job doesn't necessarily require as much markup, and you may want to consider that because your competition will too. If you're all bidding $1 million job, there's 3 of you, and not only the competition might be a factor, but it also might be that you really don't require proportionally as much of your resources to run the big jobs. So those are 2 things to keep in mind: small jobs, big jobs. Small jobs, we more markup; big jobs, we might back off a little bit. Difficult jobs comes into this into play here too. The more difficult the job, again, the more resources, the more overhead it's going to require in the long term. It takes more to manage a difficult job. Difficult because of the nature of the work is difficult, and you've got to provide more management resources, more supervision. Difficult jobs are going to require more markup. So the scenario where you're doing a lot of little jobs that are very difficult, that's probably the combination of those is going to require some adjustment in your strategy. And again, a lot of it's in perspective of what you've been doing. If all of a sudden you're looking at bidding a wastewater treatment plant and that's not something you've done a lot of, then you may just need to be aware that you're going to need more resources to run those kind of jobs. Now, number of competitors is also an issue. You don't want to, what's the word I'm looking for? You need to be more competitive if there's a lot of competitors, and vice versa. If you're the only bidder or there's only a couple of other bidders, then you may be able to mark up the job more. So that's the thing I always recommend to people is find out how many competitors there are. If you can't find it out before you bid, at least find out afterwards. Well, we were bidding against 20 people, no wonder we didn't get the bid. If you find out you're bidding against only one or two others and you didn't get it, then you want to go back and do a little different kind of review because you want to be in the game a little more with less competitors. Okay. And finally, the one I mentioned earlier is when there's a scenario where the owner is furnishing the lighting or the gear or any large portion of the material. Because in reality, you're doing as much work. It's going to require as much overhead to do that project, yet you won't have the option to mark up your material. The markup you would normally put on your material won't be as high because they're providing part or all, maybe even all the material. That's probably the most important scenario to be aware of and to be prepared for. So how do you do that? One kind of simple strategy is just to raise your markup. If your normal overhead and profit are 15 and 10, and this job has got a lot more material, then maybe you raise it to 20 and 20, 25 and 15 on overhead and profit. So the simple strategy is just to raise your overall markup to compensate for the fact that it's an owner furnished lighting or gear package. Now we can get a little more sophisticated about that. We can put a markup just on labor, because that's really what you're providing is labor. So we'll look at that scenario in a minute. And the one I really like is just marking up the labor on an hourly rate. How much do we need to add to our cost? If our cost is $25 an hour, how much do we need to add per hour to cover our markup for overhead on labor? Okay, so here's a simple scenario where we're just going to increase our markup on all of our costs. So we have to define what our overhead percentage is. We talked about this earlier, but we need to know that percentage. So what you do is you look at your total overhead, let's say on a monthly basis, and let's say it's $30,000. And then you look at your average monthly sales, or you can look at it for just 1 month at a time. That gives you your overhead percentage. So in this example, $30,000 worth of overhead on $70,000 worth on $20,000 worth of sales is 15% overhead. Now, here's the thing I mentioned at the beginning you need to be aware of. What markup do I need to recover that 15%? It's not 15%, it's higher than that. Now, this is a little bit of a, maybe a math example that you may not be familiar with, but what you need to do is calculate what we call the reciprocal. And that this is the formula for calculating that. You take 1 divided by 1 minus that overhead percentage, which is, this case is 0.15. And that will give you, over here on the left, to need a 17.64% markup. So if you mark up that job 17.6%, that will recover your 15% overhead. And again, the higher the numbers, the more difference there is in this. If like I said, if you have a 20% overhead, you need a 25% markup. If you had 50% overhead, it would require 100% markup just to recover your overhead. Okay. Now, in the situations where you know that the labor is maybe the bigger portion of the job, there's 2 ways to approach this. One is to put a higher percentage on just your labor. So again, you take your monthly overhead. Again, we'll say it's 30,000, and you divide it by your monthly labor, just labor. And so what that gives us as percentage is 35%. So 30,000 is 35, approximately 35% of 85,000. Now again, to get a 35% markup, you got to find the reciprocal, which is this little formula here again. 1 divided by 1 minus the overhead means you need over almost 55% markup to recover the overhead in that scenario. I think that might be a little bit startling to a lot of people to think, geez, I have to mark up my labor 55% just to recover a 15% overhead on my total sales. Well, if you're doing it in relationship to labor, that's what you have to do. And I think that's totally valid, because as an electrical contractor, I think what you're selling, providing, is much more about labor than it is the material. That's really where your expertise is required and should be compensated for. So it's a 54, almost 55% markup to recover 35% overhead as a percentage of labor. And here's the one I really like, because I think this really has a lot of common sense to it. So we're going to take a scenario where we've got 10 employees and they each work an average of 160 hours a month. So that's 1,600 labor hours per month. So what we're going to try to do is find out how much we have to mark up to recover our labor, how much we have to add to that hourly cost. So this way, in this scenario, we're going to take the $30,000 and divide it into our 1,600 hours. That will tell us how much it takes per hour to recover the overhead. In this case, it's $18.75. So you don't even need that reciprocal calculation. We can tell that to recover our overhead, we have to add $18.75 to our hourly cost. So let's say your average cost per hour of labor is $30. That would include, all the benefits and everything that you pay, their payroll taxes. If your average is $30 an hour, then you mark it up $18.75 to $48.75, and that just recovers your overhead. And again, that's a number I think is pretty typical. I've run into a few companies who watch that number, very tediously every month. They look at that number because they want to make sure that they're recovering that much per hour, and to make sure that it doesn't change from 1 month to a month, because it should stay pretty consistent if the kind of work you're doing is consistent. So again, you have to do these calculations for your company, but I think it's a really valuable way to look at it, is how much do I need to mark up my labor per hour just to recover my overhead? And then profit on top of that is all a bonus. Okay. Did you have any questions, Derek, that we need to address?
We do.
Oh, good.
Yes. So Chris asks, do you have a price range where we would consider the project a small versus a large project?
That's all relative. I guess I consider small projects to be in the $10,000 to $20,000 range or less, and large projects to be in the $500,000 or more. And then there's a lot of stuff in the middle. But it depends entirely on the company. I know some companies have just a few employees and they do only large jobs. And at the opposite end of the spectrum, there might be a large company with 50 or 100 employees, and they do a lot of little jobs. So it really depends. I think you have to look at it in relationship to the kind of jobs you're doing now, and then look at it that way. So if your average job is in that $50,000 to $100,000 range, and now you're bidding a job that's $500,000, that's when you want to stop and think about this whole scenario.
All right. And where can I put the 54.54% markup in a bid? Does it go in direct labor expense?
No, it would go, and I'll just flip back to the EBM screen for a second. So on your job total screen, if you're going to mark up your labor 54%, you would click here where it says overhead, and you would come up here and do by category, and you would do percentage on labor. Oops. Let's try that again. So that's where you do it in EBM. It would be just on labor. And let's just see what that does. So right now, our overhead is 13,689, and that would raise it now to compare it fairly. We want to do 15% overhead, and then we'll change it back to do it by percentage here. So with 15% overhead markup, we were at $17,000. If we do it 54% markup on this job, it would actually lower our labor a little bit, our overhead percentage a bit. But again, what we're really doing is we're marking up labor 54%.
Okay.
Okay.
The
Good
what
question
is
though. Real good question.
Dennis asks, what is considered monthly sales? In quotes, like I think we use monthly sales as an
All
example of
revenue.
that.
All revenue that comes in for a particular month. And you can do it more, you could take 3 months and average it out, or however you want to do it, but it's just your total revenue for everything that the company is doing. Now, some companies might want to separate out their service division from their new construction and construction division. That would make sense. Again, you'd have to have the ability to pull those numbers out of your accounting system, because we're talking more about bidding jobs versus doing service. So if you can separate those numbers, that's all the better. But sometimes that's really hard to do. How do you allocate overhead that's going to your new construction versus overhead that's going to your service work? It's probably more realistic just to look at it on an overall basis.
Okay, and is that revenue coming in or the amount that is billed out?
You could do it either way. That's kind of an accounting issue. Some companies are doing accrual accounting, so they're averaging it out. Others are looking at just the amount of money that comes in per month. And a lot of it would depend on just what your accountant says you should do. I would imagine most companies are looking at some kind of accrual accounting where they're looking at their sales, not necessarily just the amount of money that comes in, because cash flow can be misleading. So again, that's why you need to look at more than 1 month too, especially if you can look at cash flow. You might want to look at 3 to 6 months, so that if you have one big cash flow month and that's the one you're looking at, you don't want to
Hmm.
base your statistics on that.
I have another question. One last
Okay.
minute question. Chris asks, will you review what markup strategies we should account for on any possible subcontractors' gear lighting?
Subtractor choose gear what?
So, this is on any possible subcontractors / gear / lighting.
So subcontractors would come into the same strategy issue as owner furnished lighting and gear, because again, if you're subbing out a big portion of the job, um, you want to take that into account in your markup, because you're not um, actually I need to stop. Okay, let me take that back. If you have a large subcontract, you may want to take into account that you don't need to mark up as much on the subcontract as you do the rest of the job, because you're really not requiring the resources that you would on the electrical portion of the job, because you're basically just pushing it off to somebody else. So if you've got a big subcontract, then that's something you may want to consider lowering your markup for. Um, but again, if you do it just on labor, it really doesn't matter. If you can pull out the labor portion of the job, that's really what you as an electrical contractor are selling and providing. So that's why I like those strategies where you just mark up labor, and isolate that from your whole markup strategy. It doesn't hurt to run it through both, a couple different scenarios. What if we do it the way we've been doing it? What if we do it by just marking up our labor? See how they compare. Sometimes it'll be a dramatic difference. Sometimes it'll be just a point or two percentage points.
Let's see. Should you mark up direct job expenses?
Typically, yes. Again, EBM allows you to put a different markup on your direct job expenses. Some people would take the approach that you don't need to put as much markup on direct job expenses. But if you're marking up, if you're just using the basic strategy, you're marking up the whole job, then yes, you should mark up everything. If you're pulling out the labor again, then that isn't an issue because you're only marking up labor. So it's really kind of an either or. Either you put a markup on the entire job and just kind of wing it when you realize you got a job that's got a big subcontract, a job that's got a lot of direct job expenses, and adjust accordingly. But yeah, you do need to recover. Uh, there is some overhead associated with direct job expenses. Those are good questions, and not simple black or white answers too. I
Mhm.
think you can see that a lot of this stuff gets a little bit, you know, not only depends on the situation, but it depends on what your experience is with when you do those kind of things. Where does it put you?
All right. Well, thank you everyone for joining us today.